Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Merryn Talks Money Market Wrap, where we talk about the biggest moves in the markets this week and what's driving them. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth.
And I'm John Stepek, senior reporter at Bloomberg and author of the Money Distilled newsletter.
Okay, John, we're going to start with the I Told You So section. And on Friday, you wrote in your Money Distilled newsletter about a number that you told everyone at the end of last year that you were watching very carefully. And the reason to watch it very carefully has become very clear over the last few months, right?
Yes, it was the Nvidia share price. And the reason I was looking at the Nvidia share price is because back then, before tariffs were even a twinkle in Donald Trump's eye, well, I guess they probably were, the most obvious thing that was driving US exceptionalism was the AI bubble. Yeah. And obviously the big picks and shovels story of the AI bubble was Nvidia. And I thought, well, if Nvidia goes down the way, that means the whole market's going down. And if it keeps going up the way, then US exceptionalism is intact. And of course, it's down about 30%, maybe a bit less today, but 30-odd%.
Okay, exceptionalism not intact. And I just want to interrupt here briefly, and we're not going to talk about this because we are absolutely going to talk about markets today. So obviously we cannot talk about blackout in Spain and in Portugal and in a little bit of France and what caused it. But I do want to draw your attention to the fact that in that same publication, when we were asked at the end of 2024 what we thought might happen in 2025, my answer was that there'd be a lot more focus on national grids because they were designed for a few big centrally located power stations, not for thousands of disparate and distant renewable producers. They require upgrades or there is trouble ahead. So all I will say is, well, here we are.
I mean, that is a proper I told you so. I think that is a good one. And actually, do you know what the irony is? Helen, who asked us to answer those questions, was actually in Spain, in Madrid yesterday, in the depths of the blackout.
Well, and there you go. There you go. She should have known. She should have known. That's what was going to happen. Anyway, almost. There was the bit on one number or index that you think is important for understanding the world in 2025 when you answered Nvidia's share price. I answered actually GDP per capita in Argentina. So we're still watching that very closely, seeing if what is happening there is working. Obviously, the currency is tanking, so maybe it's not going perfectly, but well worth watching. Onwards, John. What is happening in markets?
One of the interesting things is the S&P 500 is bouncing back. And one point that people have been making is that if you look back to before all the tariff stuff happened at the start of April, it's like the US stock market is down something like 1 or 2% in US dollar terms.
John, I think I just want to interrupt and say we've been making that point.
We have made that point, haven't we?
Almost every week for a while, we have been making the point that all this stuff has happened, all this craziness, all this talking, all this angst, all this, it's the end of America, it's also awful, it's going to make war, and indices have literally barely budged. Volatile, but if you didn't look at them for 6 months, a year, whatever, you would think nothing had happened.
Or even a month.
Yeah, even a month. And that is the big question because all this stuff is real. It's real. American exceptionalism has been severely challenged. American valuations are still absurdly high. Yes. Growth stock valuations are still absurdly high. The American market is still absurdly concentrated. This makes no sense. And I interrupted you, and that's probably what you were going to say, right?
Oh, yeah, and I think that's you took the words straight out of my mouth.
Sorry, again.
Well, I think the other thing is the US exceptionalism trade isn't just about equities, though. It's also about the dollar. And whenever you look at what would have happened to somebody in the UK if they'd kept all their money in US equities, then the story is a bit different. They're down something like 15% since not the start of the year, since they peaked in February. And so that is quite a lot chunkier than just the 5% off that you would be now if you were a US dollar investor. And the other point is that it contrasts with the FTSE 100, which is, for example, only down about 2% over the same period. The DAX is actually up a little bit for pound investors because the pound, although it's going up against the dollar, it's going down against the euro a bit. So the point is, basically, if you'd owned anything but US equities, then so far this year has been at worst mediocre. And certainly, whereas if you had all your money in US equities, it's been pretty catastrophic, actually, because 15% down over the best part of 3 months is a bad return.
I suppose it's worth mentioning that that weak dollar is a bit of a double whammy for anyone who is exporting to the US, because they've already got this tariff burden and now they've got this weak dollar burden too. So it really doesn't help.
Yeah, and I do think that it's going to be interesting to see what happens over the next few months, because on the one hand, there is the whole point about the Great Rotation being more about other markets catching up with the US and that gap closing. But on the other hand, I mean, as you say, the US is expensive, and it's kind of like, if the tariff stuff, even if this tariff stuff doesn't stay intact, I mean, you've already got shipments between China and the US have dropped off, and inventories they stocked up on stuff before the tariffs kicked in, but they're only going to last for so long. So at some point along the line, some kind of COVID style, oh my God, the shelves are emptying point is likely to happen. And it just sort of depends on how everyone fudges around that and whether Trump backs down. But then you're kind of like, what was the point of trying to rebalance everything in the first place? So I don't know. I think there's a certain bit of everyone kidding themselves that this is going to be okay, whereas I think there's got to be more turbulence to come further down the road.
Yeah, and there's been an awful lot of buying on the dip, because buying on the dip has always worked historically. And even right now, it looks like it's worked, right? Looks like it's worked. Yeah. But the market can trick you quite a lot with that sort of thing. And if we look at the straightforward fundamentals, if there's recession coming in the US, and the whole tariff palaver makes that increasingly likely, and inflation coming in the US, by the way, it seems ridiculous to think that valuation gap between the US and Europe should continue.
Yeah, and I mean, I think it's also, you can see there's an element of complacency in other areas as well, because another sort of thing that was rumbling in the background the last week or so, I noticed, was this sort of dispute between Pakistan and India. And on the one hand, this kind of thing has happened between India and Pakistan a lot over time. It's not unusual. And so you can be forgiven for saying, it'll just be the same as it's always been, and it'll, effectively it's a buying opportunity. On the other hand, again, the sort of like the willingness to go straight to that conclusion sort of gives you a sense that, well, like, no one is really taking on board the global geopolitics has become rather more fractious and rather more splintered, and it's probably risky to think that it's just going to be business as usual. And I don't. It's tricky because with all these geopolitical things that are a little bit binary, but it doesn't feel as if it almost feels as if there's an element of, I don't know, limbo in the markets at the moment, where people are just, well, let's just do what has always worked. And for the time being, that has been the sort of buy the dip trade.
Yeah. Well, I suppose the thing that we should probably say about this, and everyone's bored of us saying it so far, is that when you go into an environment like this, when you go into a difficult environment, you might as well go into it holding inexpensive equities that are not already priced for perfection. And that is going to be value stocks or value orientated investments, probably more in Europe than in the US. And value investing has had so long out of favor, it's beginning to get ridiculous. And we had value investing was all the thing right up to the GFC, right? And then we all turned into growth investors with a little bit of value pop here and there. And that's been so long now, everyone's forgotten that over the very long term, it is value investing that tends to work best. And if you do accept that, then there are quite a lot of things out there that you can buy to sit out this difficult environment.
Yeah, I mean, I don't know if you got this one, but we got a note from Verdad Advisors the other day.
Oh, nice Dan, who we had on the podcast.
Yeah. It's his colleague Brian Chingono. He was writing about European, including the UK, European small caps and value small caps in particular. And his point was, I mean, because he's been watching the ETFs as well, and he noted that in the first quarter of this year, one of the big Vanguard ETFs that covers Europe has saw its biggest quarterly inflows in at least 5 years. So that's the sort of idea that money is definitely moving out of the US and into Europe. But then he was also making the point that whenever the money first rotates, especially if it's quite a large amount at once, the fund managers tend to stick it all in the large caps first. And he's pointing out that there's still massive kind of value in the small cap area, and particularly, again, the kind of, and actually the micro cap area as well. So his point is that if you are sort of, value oriented and you've got the time to wait it out, then that's the place to go, because that's where the money's going to trickle to next.
Yeah, well, that does make complete sense. So, an American investor pulls a pile of money out of America, hands it to a European fund manager. The first thing they're going to do is put it in the big liquid stuff.
Yeah.
And then gradually it'll get trickled down into the smaller companies as their allocation to large cap equities reaches a perfectly reasonable level, and then you start to trickle down. And of course, where are the cheapest small caps pretty much in the world?
Well, I suspect they're in the UK.
I think we've talked about this before. Some of the cheapest small caps in the world are, yes, absolutely here. And we've talked as well before, haven't we, about the investment trust, where you get a kind of, an endless double discount. You get a UK discount, it's triple discount. You get a UK discount, you get an investment trust discount, you get a small cap discount.
Yeah.
And there is extraordinary value knocking around in that sector.
Yeah, and the other thing is, again, despite the fact that, the UK governance leaves a lot to be desired, and, the Chancellor's probably going to screw lots of things up, hunting for taxes to plug various imaginary and, or rather, looking for taxes to plug lots of black holes and all that. But
I don't think they're imaginary. They're real.
They're real, yeah. But
you can argue about who created them, but they're definitely very real.
The black holes are there, but they're not. It's more that, they are unfillable the way that they talk about them, and it's more about the fractions of a decimal point either way that they're sort of finagling over that is infuriating. But the point is, it's like, I noticed this morning UK mortgage rates are down to the lowest they've been in quite some time. And also,
buy a house. Everyone go out and buy a new build.
Well, I know, yeah. Don't even get us onto that.
Listen to our podcast from earlier this week on how to buy the best house if you're going to buy a house. It's really, really excellent. Say it myself. And very important if you're looking at those lower mortgage rates and going, do you know what? I'm going to buy a house. Listen to our housing series before you go anywhere near the housing market. Please.
Definitely.
Sorry, John, I interrupted you again. What were you going to say?
No, but the thing is, so mortgage rates fall, then consumers are going to have more money despite all the other stuff they've got to put up with this year. And also the UK is it's one of the countries that is least exposed to whatever ends up happening with tariffs. So from a big picture, global investors don't pay that much attention to the politics of a country. They just want a good excuse to tell their clients why they're investing there. And actually the UK has the excuses lining up, lower interest rates converting to, consumer kind of coming back, and then the big picture being immune to the tariffs, basically. So you can see why inflows might head our way, because the guy that's telling his clients that has got a story now to evangelise about, which they didn't have for the past, 8 years.
Yeah, reminder that all market action is about stories. And I did actually, on that very note, John, get a note this morning from someone suggesting that we've been waiting for a catalyst forever for UK small and mid caps to start moving, and it may be that the progress between the UK and the US on the making of a trade deal could be that catalyst. Because UK smaller companies are much more often than big companies, straightforward, simple businesses, and if they know where they are tariff wise, that may be something that makes everyone go, okay, now we know where we are. We can buy these exceptionally cheap small caps. We live in a world of hope, don't we, John? I mean, we really do.
We do. Maybe this is the catalyst.
We are optimists. We are such optimists. People sometimes say that, we're perma bears, we're pessimists. Not so. No. Optimistic, bullish, enthusiastic about the future. Thanks for listening to this week's Merryn Talks Your Money debrief. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and John_Stepek. We are also both on LinkedIn, where John is slightly more active than I am. This episode was produced by Summer Sadi, production support and sound design by Moses Andam. Questions and comments on the show and all our shows are always welcome. Our show email is merrynmoney@bloomberg.net.